Welcome to the latest Motley Fool Scoreboard. I'm on in Chockaloo. We've got longtime fools, Dan Caplinger and Travis Hoium, giving a 1 to 10 rating to a skier's dream company, Vail Resorts, ticker symbol MTN. We're going to rate the business first. A 10 is invincible. A 1 is hopeless. Travis has an 8. Dan has a 6. I'm going to let Travis make that 8 case and then have Dan tear it down.
Yeah, really strong business, very profitable, maybe not growing as much as it used to be, but how in the world do you disrupt this business? So when you ask what's the strength of the business, I think you got to go extremely high because they're not building any more mountains. And that's the durable piece of Vail's business.
Yeah, I think the fear I have is that Vail disrupts from within, taking too much for granted, kind of its jet setter minded mentality. I mean, the Epic Pass, if you can get from place to place, if you can fly from continent to continent, it's such a no-brainer value proposition. You just have access to everywhere. But for the average person who might get 1 ski trip, 2 ski trips a year, the costs are high, they keep getting higher, and weather has increasingly been a huge disappointment. So when you buy a pass, you're kind of thinking, okay, yeah, I want the weather to be good, I want the conditions to be good whenever I go. When that doesn't happen, it just disappoints. And that seems to have been happening anecdotally more and more as years go by.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. They've both got 7s on this. We'll start with Dan.
Kirsten Lynch has done a great job. She's done really well in emphasizing the Epic Pass concept. Basically, hey, don't count on those one-day skiers. If you have a bad year, it can really hit you. Instead, lock them in with a ski pass at an relatively attractive price. Push the day pass prices higher so that it gives people an incentive to do that Epic Pass. It's not Kirsten Lynch's fault that the weather hasn't always cooperated. That strategy to try to make Vail Resorts revenue sources kind of more durable and more predictable, it's paid off in a big way in protecting the company from, I think, would have been much worse disruptions if that strategy hadn't been in place.
Yeah, I 100% agree. The other thing I'll just add with the Epic Pass is not just about the amount of money that they're making for the lift tickets. You actually have incentives as an Epic Pass holder to even eat at their restaurants. So it's like a holistic thing trying to keep you in the Vail ecosystem, no matter where you are, no matter which one of these resorts you're at. The other thing that they've done a really good job of is acquiring properties all over the country and all over North America in particular. I live in Minnesota. There is a resort here. Doesn't get a lot of snow. Not a great ski place. But if you're a skier and you want to ski here, Afton Alps is a place to do that. And guess what? I bet you're going to be more likely to go to a Vail resort if you head west to the mountains. So that shouldn't be overlooked. Is that she's maximized everything there is, I think, to maximize in the business as it exists.
For financials, a 10 is a fortress, a 1 is yikes. Travis has a 4. He'll start us off. Dan has a 5. Travis, why so low?
I just don't know how much further you can push this. And Dan talked about this. I was up at Breckenridge late in the summer, and we were just looking at what it would cost to take the family. My kids are getting to the age where they could maybe start skiing. I started skiing when I was really young and spent a lot of time in the mountains. It's incredibly expensive now to go to the mountains. And it's not the easiest place to get to depending on where you're going. So I just think there's not much harder you can push on the business. There's not many more properties that they can acquire. Can those single day lift tickets go to $300 a day? That sounds crazy. So that's why I just went lower. I think the downside risk for Vail Resorts is that there's going to be more and more people throwing their hands up and going, you know what? We have other things that we're going to spend our money on than throwing several $1,000s into an Epic Pass every year. We're gonna try something else.
Yeah, revenue and profit's been relatively stagnant the last couple of years. Debt levels have been going up. They've been making acquisitions. It's still manageable. I'm not concerned short term. I just think the business is more subject to the ups and downs of macroeconomic trends than most areas of travel. That, I think, that motivated the 5 that I gave it.
Moving on to valuation, Dan. How well will Vail's stock do over the next 5 years? And how safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
I expect 5 to 10% returns from Vail Resorts. I gave it a safety score of 5. Put it in perspective, the stock trades where it traded 8 years ago. So to me, I think that you've already had kind of that period of stagnation. I see it as kind of a market perform. That's where 5 to 10% is on me. But Vail does have to figure out how it can protect itself and still deliver customer value in light of these weather changes that we've seen. Past couple of years, luxury travel got its boom back after the pandemic. At this point, maybe that reverts back to the mean. I think you might get a further period of consolidation. I'm hopeful that they can kind of rebuild the brand and get some stock price movement back on the upside, maybe looking 3, 4, 5 years out.
Yeah, I guess I'm a little more pessimistic. I said 0 to 5%. And the shorter ski seasons, it's one of those like intangible things, right? Afton Alps got 9 inches of snow last year. So we see that here. It's a little bit harder to see in the mountains where the numbers are really volatile year to year. But you're having later ski seasons, which really hurts those early season epic pass sales. So I think there's a number of headwinds for the business. And I just think that's why I went low on the safety number, because there's so many risks. They almost have to keep performing at this really high level. If the traffic numbers, if we go through any sort of economic turbulence and we have some sort of recession, I mean, it's very possible that revenue could fall 10, 20% if people just don't buy their epic passes for the year because they don't, have the job safety that they had a couple of years ago. So that's why I think my expectations are pretty low. Really solid business, really impossible to disrupt. Also really tough to grow.
Top it time, Dan. Is there a company you like better than Vail Resorts in that space?
There's really not. Just about every other company in the ski resort space specifically is privately held. You broaden it out to like theme parks, entertainment destinations. I think you're seeing a lot of the same kinds of pressures along with rising labor costs and just general macroeconomic pressure. It's a tough business to be in, I see.
Yeah, the entertainment space. Let's look at MGM Resorts. Pretty cheap stock, depending on the metrics that you're looking at. Enterprise value to EBITDA. If you kind of pull out some of their other assets, is only like 4 to 5. They're buying back about 15% of their shares every single year. Phenomenal cash flow business. Again, a little bit like Vail, not building a lot of new casinos in places like Macau and Las Vegas. They also have a casino coming in Japan in 2030. So I think a lot of growth there, good value. That's why I like that one better.
Thanks to both Travis and Dan. They've given Vail Resorts an overall score of just 5.4 out of 10, lower than the last time we did it with Emily Flippen and Matt Frankel. They gave Vail a 6.8, still not that high. That said, because of the leading position it has in ski resorts, this one's got a season pass on my watch list. I'd love to own it at the right price. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is an auto supplier. Till then, Fool on.